Hey guys, welcome back. Beautiful day in the market. It is first of the month, December 1. We're going to talk about this bleeding red SPY, some GameStop, some TA, some options, some Fidelity. Sub up, like up, comment down. Happy money sticks around. Not a whole lot on Reddit. Huge new wave of people DRSing because they're pissed at Fidelity for them saying they had more borrowable shares than they actually had. And who's to say? The Fidelity safe haven, though, for those that were thinking that is the holy grail of brokerages, and how E-Trade's so bad and Robinhood's so bad and Weeble's so bad, and you don't know. Yeah, they're all out to make money. There's no brokerage charities as far as I know. So if you're expecting a brokerage to care about your emotions, then you probably shouldn't be using a brokerage. I'm gonna stick with brokerages. Yeah, they might screw me in some ways, but that's kind of the cost of doing business. So I have my GME shares sprinkled amongst a plethora of perhaps shady brokerages. So yeah, I am fine with that. I do trade options, so I need to use a brokerage, and I have to also have margin. That's the way it works. We trade options. We have Twitter. You can follow us on @HappyMoneyYT. Oh, he almost got me. Right here. And then we also have a Discord server. You can jump on there too and tell me why I am a shill, because I like payment for order flow. All right, just kidding. Let's go. Market sold off today. Powell, for however many months, years he was in office, was printing his money, and printing our money rather, and devaluing our money, and then saying, once we had inflation numbers that we haven't seen since the 70s, saying how it was transitory or temporary, and coming up to his re-election. Yeah, pretty much he got re-elected, or however it goes. He's back in the same position for another term, and now he's saying we probably shouldn't call it transitory anymore. That is the transitory inflation is actually a transitory phrase, and we should move on to just calling it inflation. I don't know what he said move on to, but he said it's transitory inflation might not be transitory anymore now that I'm reelected and I'm in this position. So yeah, decided not to prop it up anymore. We're starting to see some volatility, partially from that, partially from this new COVID they're trying to scare people with. Could be any number of things. We just know the market is way too high, and they've already started selling off big positions up here and all throughout here. Nice little blow off the top right here on the daily chart for the SPY. Now we're seeing big volatility, big red under the 9. MACD's bearish. We have lots of bearish plays on the SPY. We've been waiting for this for pretty much all year, actually. Ever since it started hitting just high on the RSI, and didn't. Once we passed the COVID high, that's when I was like, no way. This was the high before COVID, when they're just chilling. You know, market was quantitative easing since 2008, and COVID, they had a good opportunity to dump it, and then less than a year later, we are already surpassing the amount of money that's in it because of all the money we printed. Anyways, I won't get into any more, but once we were here, I was like, wow, this is too high. Our market was not in way better shape, or even at the same shape it was here in 2020 as it was before COVID. Many things were shut down, people weren't working, people were living off the government much more than they ever have, and it only got worse as the market continued to rip. More money was printed, more money went into the market, more people weren't working, restaurants weren't open, supply chain issues started coming in. So yeah, long overdue, but we might be en route to a market correction crash, maybe one like we've never seen before, maybe worse than the Great Depression, maybe just like 2008. Depends on how far they let it properly cleanse and correct, or if the powers that be keep it going. Round and round we go. GameStop might be part of the contributor to cleansing the market if it all plays out to fruition, and the massive over leveraged hedge funds and big money basically pulls out of their positions and closes, and we get back to a market based on supply and demand. That would be lovely. Anyways, here we are. GameStop coming down. Another big down day actually for GameStop. So I was saying 175, maybe by earnings, maybe before earnings, and then possibly a rally after earnings. And with how big today is and how the market, the SPY is down. Yeah, so SPY is only down 0.09%, but it took a huge trip. I think it was up 2% today. It was basically a 2% downward move in reality, even though it's not down much from yesterday's close. So just a little bit down from yesterday's close. We might have a big dump coming into Friday, the next 2 days. So given that the market hasn't come down a whole bunch today, and yet GameStop moves with the market for the most part, unless I think liquidations are happening, then it'll inverse. But that being said, since the market hasn't, it's kind of a big day for the market, but not huge. And yet GameStop had a pretty big day. So that means if we actually have a big day on SPY, I'm wondering if GameStop will really, if we're really going to hit that 175 or possibly 165 support before earnings. The momentum we have right now, it seems like we might, but I'm kind of expecting a bounce here, honestly. I was expecting more of one today. I actually got calls here. They were up 30% here and then kind of just melted back down with the market. So I think probably a bounce tomorrow or after hours, and then probably more to the downside. We'll see. We'll see how quickly they can bring this thing down. On the daily, the RSI is already down to 40. Hourly, it's way oversold at 22. So that's kind of why I'm expecting a bounce. Here's 180. So yesterday's big bounce was at 188. Wow, this thing is not letting up. So I had some bearish plays, covered calls and such. I closed out about back here. They're up like 70-80%. So I will show you guys those. And then I have call credit spreads. For whatever reason, it's just showing up really weird down here. I don't know if it's a wide spread. It's a 205, 207.5 call credit spread. And it was like $1,000 max gain. So this one should be fine. I have an order out to close it for minimum. But when I go to analyze, it's just max profit, 0, not applicable, max loss. I only can have a max loss in this somehow. So I don't know why it does that. I've closed the program, reopened it. It might be because I was also adding more short. I shorted more 205 calls, and then I closed them back. Then I bought them back to close, and I'm wondering if that kind of messed with this one or something. I'm not sure. But yeah, that bearish play is good. Would have been nice if I went a lot heavier on it, but that's hindsight. If we do get a good bounce tomorrow, I probably will make a bigger call credit spread bearish play into for next Friday, and then close it out once it's up some, probably before earnings, just in case we do have a big epic bounce on earnings. It's hard to tell with this account, since I have so many shares in here, kind of what we're making per day on the downward side. I just see on a downward day like today, we're down $13,000. It's like, okay. I think we made some on the downward side, but a lot of that's the shares. You know, this is down 13K, just the shares. So I do have bullish plays here still. Like I said, I'm gonna roll this one over for next week, the 210, 217.5, which is getting further and further out of the money. We just hit 175. Holy smokes. Yeah, we might hit that 179 rather. Might hit that 175 before earnings. It's Wednesday. We've got Thursday, Friday, Monday, Tuesday. This is different. This is much different than any other earnings we've had in the last year, where it's just a big sell-off into earnings. This chart before today, and maybe even today too, looked to me the most like that one. No, this one right here. So even this bit where we had that spike, then kind of consolidation, and then another spike, and then kind of a sell-off into earnings. And then see the biggest red day was right after earnings, and then that huge, I think that's from failed delivers. Market's really coming down here too, actually. So That's so when the market's going to come down hard, it's going to bring GME for the most part until we start seeing some liquidations and then potential squeeze. But yeah, so this kind of looks like a similar pattern we're in right now. We had this spike, and then we had another rally, and then kind of a down. And then besides today's a bigger down day than we had back here. But if you look just at this little area, and then look at this area, spike, consolidation, rally, spike, consolidation, rally, sell off. I'm just looking at the timing also with earnings. So sell off and then big dump into earnings and then rally. So somewhat similar to this. SPY's coming down. Wow. So that was a big move round trip today because it gapped up like 1.5% at open, went up another 0.5%. So now they're up 2%, and then now it's down 0.3%. And GME's come with it. So we might hit, we might hit our low today. This is interesting. On the put side, it's probably a little late unless we get an epic bounce and you think the trend's still down, but we're getting so far from this 9 moving average that I'm expecting a bounce, at least somewhat with consolidation. Kind of like we had, it was at, yeah, this day. We had that big drop into 188 and then a rally and then kind of sell off today. Today's a much bigger day though. And it honestly could just get bigger. If we're having a real start to see a real kind of market correction crash at this level, then these RSI levels won't really matter a whole lot. It'll go deep into them and just not let up. So we might start seeing that, and we might see that lower. We have a gap to fill there at 174.26. I think we'll fill that, and we might even see a retest of that 165. Only bearish till it's consolidating, or bullish, right? So anyways, it's coming down. Had the covered calls on here, sold those out, closed them. I probably open more tomorrow on a bounce and try and just ride out maybe $700-800 on the way down. And then you start to notice it when GameStop starts to rally back up. Then you're like, your starting point is higher basically because you've made these, you know, a few $1,000s or whatever on its way down, and then you can see you don't have to basically get as high on the upside to start making or being higher on your P&L. So yeah, let's see what we did today. Sold short, so 205, did 8 of the 205s for $240, and then bought them back for right here, $105. So 100 and something dollars per contract, had 8 of them. I got some leaps today. Not really a good time to be buying leaps. I keep just some stuff is just a good deal and I have a hard time, but I got some Corsair leaps and I got calls on Merc. So Corsair, it's in my long term. I like it. I think it's at a good price. Birds, what do you know? Birds rallied today, 6%. I have leaps on Birds as well from, I think we got them in yesterday. So those are still hanging out about the same price. My calls on Birds that expire in 16 days, these have come up a lot in percentage. These might end up being pretty good plays. It's weird, this is kind of inversing the market right now, Birds. Kind of strange. Our BBY play, of course, that call credit spread is working out nice. That should close at any time, probably tomorrow. Bearish play. I really don't have a whole lot of bearish plays anymore. Lagging on the market. So we have the Bank of America puts pretty far out of the money, but the way this market's looking today, this is look at that, 177. Wow. Yep, we are cruising now. We are definitely cruising. These gaps are gonna get filled quick. Really quick. So the call credit spreads I have on SPY, basically 447, 452. My lowest one is 447, so it has to close below 447 by 9 days from now. And that's actually getting really close already. So on a bounce, I'll probably open up some more, either average into these or open up some more of those. Try and fight back my way out of the hole of all the SPY calls and puts I bought this year. I did have a bullish play here on SPY, but that one's not going to work out. MRK has I think they're the ones with the pill for COVID. potentially. Got some calls on that. The premiums are really cheap. I don't know what's going on, but this thing was just at $91. Definitely volatile. So I was thinking the premiums are going to be high, and they're like 32%. They're all under 50%. I don't know what's going on with these. They seem unusually low. Maybe this is different. No, that's right. So I got some of those. I don't know if it'll. I mean, if they get a COVID pill, that would be huge, huge. I mean, any company that has like a COVID pill and not have to take a shot would, I think, do amazing, especially if it had a good effective rate and stuff. So, yep, that's what I got for you guys. We will see you on Discord. I have actually one more thing. Look at Build-A-Bear. So Build-A-Bear, it's interesting. They had good earnings. They're going to offer a dividend, I believe, and a buyback. All good stuff. So you know the basket of stocks that are shorted with GME, a lot of retail stocks. I think there are like 400 of them actually overall. Build-A-Bear I think was one of them, and I've kind of thought this before, and I just looked at Build-A-Bear's chart, along with COS, AMC, Bed Bath & Beyond. There's honestly so many, but actually that's something else I want to talk about. But I think they kind of separated them back in January. They kind of isolated different ones and basically started covering or closing positions in certain ones. And I think Build-A-Bear is one of them. So if you look back in January, when it had this massive spike right here, January 27th, that's a very familiar date. This is January 27th on GME. This was it on Build-A-Bear. And then 28th right here, big spikes that day. And then Build-A-Bear, see, I think they started closing and covering the smaller positions maybe they had, or for whatever reason, certain ones they decided to do it with. Because this was trading at $5, and now it's at $21. So to me, this is where GME could and should be, at least, if it was more of a natural closing of their short position. Excuse me. AMC kind of did the same thing. We'll look at AMC briefly here, but look, kind of just grind it up. Nice consolidation, and then look at this day. What is that? 526. That sound familiar? We all know these dates. Actually, yeah, let's look at this. The 224. I don't know if it actually had a big one on 224. Kind of. These are pretty big days, right in that same area. 310. Not really. Yeah, that was the peak on that one was 310. Look at that. That's 301 right there. That was the high. The high there was the high here. And let's see what that day, 526. Right there, right when GME peaked, had a big spike here, all the way, very similar, and then this was from earnings. So I don't know if this thing's gonna like necessarily squeeze or something more. It's maybe mostly done, I'm not sure, but just to look at the chart. So here was the January high, you can imagine, compared to GME. Right? So to show you the scale on where GME really should be, I feel like if it wasn't the most manipulated out of the basket of stocks, this was the high on Build-A-Bear for the January. Whoops. For the January pinch. And, this was GameStop's. So you can see where this thing has come from $8, now it's up to $23. Put that into scale for GameStop, I mean, it would be, we would be crazy, be way up here. Given this was this probably moved up more than Build-A-Bear did, just because a lot of specific retail, the tweets going on and that sort of thing. But yeah, it's kind of interesting. So I think they've just covered different and closed different ones in the basket kind of separately. So I think AMC is part of that. I think this rally potentially was closing. I think this was also them kind of flipping long to kind of suppress GME and pump this one because they had a long position, and then they could basically maintain their margin requirements they had with GameStop to maintain their short position. But yeah, here's AMC's high on January, $20, and went all the way up to 72. So kind of the same thing, 43. I think that put it somewhere up here. So AMC, I think they covered and then probably used separately. Dude, look at costs. That's so weird, actually. Was it really that much? That's crazy. So, I mean, they're all kind of similar, but different in different ways. Because I'm not on auto. I did not realize actually costs had that much. That was a bigger move than GameStop. Sort of. GameStop started earlier. It did have a $2.57, but by the time it started that whole epic rally, it was at 40 bucks. This thing was at 6. Wow. Anyways, and one last thing, talking about GameStop and this cycle and pattern they're stuck in. You can, now that we've been in this almost a year, I mean, given they've maybe had this short position for years and years, no one really knows. The market's been dumping since I've been talking. It's so cool. You can literally now just go back and just see how it trades, and it most likely will trade the same. What was the next hype date? What did someone say? 22nd of December? What do you know? This big green candle? Okay. Right there, 22nd December. So we are right here, December 1. What do you know? Consolidation, dump for earnings, which we're about to come into. Found a floor, December 22nd, huge rally. I might be getting calls. Maybe the week before on that Friday. We'll see. I'm just curious where we are. Curious if this will happen on the 22nd, and then, of course, January 13th. This whole thing. Again, this was somewhat, I think, separate, just because of a lot of retail FOMO and tweets and external factors that maybe sent that higher. But yeah, it'll be curious to see how we start trading into a new year, if it actually copies similar price actions. So crazy. Thanks for watching, guys. We'll see you on Discord. Peace out.